Julius in Texas wants to know, is it necessary for a married couple to have two separate life insurance policies?
Is it necessary? No, there are policies that typically can be second to die kind of things, but they're more exotic. For most people, you want to each have an individual level term life insurance policy, and go read how you should shop for that and buy it on my guide at clark.com.
Kevin in North Carolina says, I've been looking for term life insurance. I found Haven Life, and I found that they offered a no medical exam option. But after filling out the application, they came back with, quote, take the medical exam for a potentially lower rate, or bypass the medical exam but pay a higher rate. I was really hoping not to have to do the medical exam. I have a couple of issues that are currently under control. So what considerations should I have in making this decision?
All right. So this is a great question, and it's something that I have addressed, but maybe not very clearly. So when you use one of the one of the life insurers that does instant issue of policies, there's a small percent of applicants that will be required to do a medical exam. But what you brought up is a response I have not heard before. And that is that they're giving you the choice of avoiding the medical exam in return for accepting higher premiums for the life of the policy, or undergoing the medical exam and getting a lower premium but potentially being rejected for a policy. That is a new wrinkle that is new on me. Usually, most people sail right through with one of the insurers that does instant issue unless there's a pre-existing. In my case, I have zero chance with the pre-existings I have and my age of being able to go through one of the automated underwriting processes. So you could try another of the automated services and see if you sail through, or maybe you are someone who needs to go through traditional medical underwriting, or if you're really worried about that and they did approve you for a surcharge premium on the automated issue, maybe you go ahead and accept that so you know you have the policy and it's instant issued. And if you hear in me a lot of hemming and hawing, there's not an easy answer as what your best course is once you have not sailed through the automated underwriting.
This is from Julia in Connecticut. Julia says, I heard you talk recently about life insurance. My husband and I purchased a 20-year level term insurance policy when our kids were young. They're now 23 and 21, graduated from college, still living with us, but neither one of them has student loans. Our term policy ends in a few years, and we're wondering if you think that we need a new term policy. We have enough saved to cover funeral expenses, and we're on track for retirement.
So, first of all, you were really early in the game. Having a level term policy 20 years ago? Nobody even knew what that term meant 20 years ago. I'm very, very impressed with your financial wisdom. As far as whether you need to replace that policy with a new one, depends not on how you put the question about you're on track saving for retirement, but if only one of you was still around, would the other have enough money to live on? And if the answer's yes, if you'd still be okay, then you don't have a strong need to replace that insurance policy. If you're not worried about providing income or support to your now adult children, then that would eliminate a need. So when the 20 years runs out, there may or may not be a need for a replacement. And it really is you sitting down and really thinking through, if one of you does pass away, is the other still okay financially? If the answer to that is yes, you don't need one, and you're not worried about the kids, you don't need one. If the answer is no to either of those questions, then you do want to replace that policy. Adam is with us on the Clark Howard Show. And Adam, you are someone with 2 young children. How's it like having 2 very young kids at home?
Yeah, it's good, Clark. Thanks for taking my call. I actually tell people that I'm on vacation because I go to work every day, and my wife, she actually stays at home with him, and she definitely works harder than I do. So she's the best.
Yeah, because she's on duty every day of the year.
Exactly. Yes, sir. That's right.
Well, how can I help in your situation with, stay-at-home wife, 2 young kids?
Yes, I've been putting it off. I know I need to buy. So we're both 31. You know, I've got some life insurance stuff with work, but I know I need to buy some level term life insurance. I wasn't sure like how long, and then if I needed to set up a policy for my wife as well. She is probably going to go back to work when the kids are in school, so 2-3 years.
So you both need to have level term policies, because whether she's at home or she's working, you're going to have expenses for the children, and you each need to be there to financially support the other. And so at 31, buying level term insurance is ultra cheap. And you're in a position then that if you buy a 30-year policy, you've covered most of your remaining working lifetime. You're handling expenses for the kids till they're in their, in their early 30s, buying a level term policy. It wouldn't really be needed for the kids past their early 20s, but it means there'd be more support financially for each of you. Also, if you ended up, one of you did pass away decades down the road, the value of what you bought now is actually less because of how inflation would erode the benefits over the years.
Gotcha.
And so that's why I like for people to buy, particularly with 30-year level terms, I like for people to buy hefty policies, generally about 10 times your annual income.
Okay.
So with you,
now,
that would be easy. You just take what you make in a year and multiply by 10.
Yeah, now, should I do, that was one of my other questions, because I'm salary and commission. Should I take 10 times salary plus commission, I'm assuming?
Yes, absolutely, because as somebody who earns commission, it's a realistic part that will vary year to year, but there's kind of a sense of what the two together are, and that's the real replacement of income you need to take care of. So the two together, and for your wife, before the kids, was she working in her chosen profession and have kind of an idea of what annual earnings would be for her when the kids go to school and she goes back to work?
Yes, sir. Yep.
So buying the 10 times would not be hard. There are more complicated things people will do where they'll buy a 20-year level term to keep an eye on the financial needs of the kids, and they'll buy a second 30-year level term policy and do a mixture in the amount of coverage. And that, to me, for a situation like yours, sounds like more work than is necessary. I would just keep it simple. Each of you buy a 30-year level term and have that nice large benefit to meet unexpected circumstances that we hope never occur. You know, the best thing you can ever do is pay on a level term policy 30 years and never need it, because you're still with us.
Tara in Washington wants to know, is it a good idea to take out whole life insurance for my 18-year-old daughter?
I know of no reason why that would be a good idea. Whole life insurance is a product that has not very much use in the marketplace anymore. It's a life insurance policy and a savings account wrapped up into one. The premiums are very, very high for the amount of life insurance coverage you get. And it generally takes somewhere between 12 and 18 years to overcome the commissions built into a whole life policy for the savings aspect to really be valuable for you. For most people, what you want is you want a life insurance policy that provides replacement of income for those who depend on you for income, and that may or may not be true for an 18-year-old yet. And the type of insurance I recommend for almost everybody is level term insurance, where you buy it for a specific period of years, typically 10 to 30 years, dirt cheap, very easy to compare one company to another. And it provides what life insurance should be about, is replacement of income with your untimely demise. Who benefits from whole life insurance? Usually you have to have a income in the range of $400,000 to $500,000 a year or more before a whole life insurance policy makes sense.
Vanessa in Georgia says, I'd like advice on how to find the best life insurance policy. I only want enough to pay for a cremation and to leave my husband enough to pay for any out-of-pocket hospital bills that might be left over. We're on a fixed income.
Right. You were very, very sweet to be looking for ways to protect your husband if he outlives you. And the inefficiency of a small policy is that you pay essentially policy charges regardless of the size of a policy, and the face amount of insurance you'd be talking about would be likely somewhere between 10 and 25,000. So the policy, what you get, ends up being very, very expensive for what you would be getting. This is a case where if either of you have access to employer-provided life insurance, something that I don't really get jazzed about, but is very inexpensive in this kind of situation, a small amount of employer-provided life insurance would be preferable. The other way to look at this is to think about making the final arrangements much less expensive. And you now can do so a number of ways, where you join a nonprofit, a local nonprofit known as a funeral or memorial society. Typical cremation will be in the hundreds of dollars, something that you normally would not need to insure against. In addition, there are organizations that help someone, even a survivor, taking care of arrangements for someone, that allow you to shop online even when the need is immediate, and the price differences from one provider to another for a cremation or a burial or whatever it is you want vary wildly, as well as for various funeral services. So that does not need to be something normally that someone would insure for. The other thing is, as far as the medical bills in most states do not become an obligation of your surviving spouse. There are some states that would, but do not sign any financial responsibility form ever for a loved one who's being admitted in the hospital. And those bills usually will go away when you pass away. So that would not normally be something you need to insure either.